Hi everyone, this is Rob from Federal Finance CPE, and today I'm going to talk about Federal Budgetary Accounting, which I know sounds super boring, but trust me, it's pretty interesting when you get into it. Think of it as how government tracks its money. Alright, let's start from where I think the beginning is. Our government has 3 branches, and they each have different roles to play when it comes to money, setting budgets, and spending. These 3 branches provide a check and balance over each other. Well, budgeting is a perfect example of this in action. Congress, or the legislative branch, gets to decide how much to spend and on what. They do this every year, and they're in charge of those money decisions. Meanwhile, the president and those in the executive branch, they're actually, running the government day to day. They're the ones who are spending the money. They have to track what they spend, and then they have to report on it. Now, I'm not forgetting the judicial branch in this, but for our conversation on budgetary accounting, I don't think it's too relevant. So here's the thing, though. Regular accounting, the type that we all learn in school, that businesses use, they don't track budgets the same way government does. They don't put it in their general ledger. So accountants in the federal government had to come up with another method to track their budgets, which was cleverly called budgetary accounting. And before we get into it, I hope you're finding these discussions interesting. And I would love for you to subscribe to our YouTube channel, Federal Finance CPE. We post videos and have some discussions, and it really helps when you subscribe and get involved. Remember, it's totally free. And it's the great way to keep up and learn a few things about federal accounting. All right, so where do these reporting requirements come from? Well, it's the Constitution. The Constitution, it says in Article 1, Section 9, Clause 7, no money shall be drawn from the Treasury but in consequence of appropriations made by law, and a regular statement and account of the receipts and expenditures of all public money shall be published from time to time. In plain English, this means Congress controls the money, and the executive branch has to report on what they spent. Pretty straightforward, right? But here's the catch. The executive branch has to track not only, what they have spent, but what they are authorized to spend and what they're going to spend. So before we get into where we are now, let's look at back where we came from. And this, I want to look at a report from the Navy in 1875, specifically the statement exhibiting the balances of appropriations unexpended. So even back then, they tracked budget information. You can see they have balances they brought forward from the appropriations for the years, repayments, overall available funds during the year, and then payments during the fiscal year, and then amounts carried forward. This information is really useful, but when compared to today's budgetary accounting, it's not as comprehensive. This is reporting about overall amounts and balances without getting into too granular detail. Today's budgetary accounting does cover your appropriations, what you've spent and what you haven't, but also it gets down to the level of what's the status. Are you obligating these funds? Have they been apportioned? Have they been, really what stage of fund control or the spending life cycle are they? So these are improvements that we have made. Now we're going to get into the concept of the 2 system of accounting that we use here in the federal government. This is probably one of the more tricky things as you come into this space as somebody new to budgetary accounting. It's because essentially the federal government has 2 accounting systems all within one chart of accounts. The first is just regular accounting. It's, what us accounting nerds in the federal industry call proprietary accounting. This is your normal accounting stuff. You're tracking your assets, your debts, expenses, incomes, revenue, gain, all that great stuff that you learned in school. It does tell you the overall financial picture of your agency. But it doesn't do one key thing. It does not track your budget. There is no budget GL in commercial accounting standards. So what this would mean is if Congress gave you $10 million and you spent $7, your records are going to show how much you received in cash. It'll show you had $7 million of expenses, and you would have $3 million of cash left, but it doesn't show the status of those funds. Can you use those funds? Are they limited? Are they restrictions? You wouldn't know that in proprietary accounting. That's where budgetary accounting comes in. Now, this system specifically tracks the budget and what's the status of your authority to use this budget. These are going to be the 4000 series accounts in the standard general ledger chart of accounts. And I don't want you to get too worried about the technical details right now, but the important thing to remember that the 4000 general ledger accounts, they're used to create one of the financial statements we have in the federal government, which is the status of budgetary resources, or the SBR. Also know that the 4000 series are self-balancing. So when you add all the 4000 series accounts together, they should net to zero. If they don't, you got an issue. You got to figure that out. And with this information, we're able to show, track, and communicate with Congress saying how much money budget were we given, what is our budget authority, how much have we spent, what's the status, do we have amounts obligated, unobligated, unexpired, expired, all those nuances that come down, we're able to track with budgetary accounting. So why should anybody actually care about this, right? Budgetary accounting. And I'm going to tell you because it actually matters. If you're going to get into the federal accounting in space, you need to know budgetary accounting. First of all, budgetary accounting creates accurate financial report on our budgetary situation, our budgetary resources, or status of budgetary resources. It keeps track of it so we know how much we have, how much we can use. It allows our managers in our agencies to best support and execute the mission, because if you don't know how much you have, how much you're expected to spend, how much you have left in that year, you're not going to be effective. It allows us to monitor our limits, to provide funds control so we don't exceed what Congress has appropriated for us, which isn't just good practice, it's the law. And just overall, by tracking our budget and knowing the status of it, it's going to help us be better stewards of taxpayer dollars. We're going to know what we have. We're going to use it efficiently. And I think that's something we all want and care about. So I just want to say, if you're interested in learning more about any of this stuff related to federal finance, federal accounting, my company, Federal Finance CPE, offers training. We're part of Persons Consulting, which is a service-disabled, veteran-owned small business. I just wanted to throw that out there. So that concludes our discussion today. This is a very brief intro to federal budgetary accounting. It's the basics of how our government keeps track of the funds that it's given and how it reports from the executive branch to Congress about the spending decisions they've made. So next time when you hear somebody complain maybe about government accounting being a little bit too complicated, you can say, well, that's actually there's a good reason for those budgetary accounts. You can watch their eyes glaze over and explain it to them. I mean, just kidding, kind of. Thanks.